Good evening, guys. Welcome back to our Not So Late Night Show. So, if you guys have watched our past episodes of our Not So Late Night Show, we have been revolving around the Malaysian banks. We have gone through three Malaysian banks, and all three of them has actually reported recovery kinds of results compared to what they have actually endured and so-called experienced during the fiscal year 2020, where a large part of it is actually underperforming due to the COVID pandemic effects. So for today's episode, we will actually be going on a trip to Singapore and to find out whether things are actually looking the same, if not even better for our Singaporean banks. And of course, the bank that we will be talking about today will be DBS Bank. So DBS Bank, we'll go through later what kind of bank is it, and in terms of size, how big is it, and of course, not only that, we'll also go through the business model, whether it is still a traditional bank like most of the banks in Malaysia, like public bank, or there is some kind of so-called more exciting prospects that the bank is actually looking to grow. So I'll pass it to Chun Bing to talk about that later. But before that, we'll just quickly pass through the disclaimer statement, which is to not ask you to buy, sell, or hold stocks like DBS Bank or even the companies that we might actually bring up during this sharing session. So of course, if you really like the company, do your due diligence and then further analyze before you make any investment decisions. Right? So straightforward. After the disclaimer statement is gone, let's pass it on to Chun Bing to actually go through the business model and the information of DBS Bank.
Yep. So I think if you talk about DBS Bank, if you guys are not familiar with Singapore markets, you can straight away link them as the equivalent to Maybank in Malaysia context. So they are they technically should be the largest bank in Singapore, not only in the region. Not only in Singapore, but also in the regions, right? So it's about the same. Singapore also got top three bank. You got OCBC and also UOB. But then today we will cover the biggest one, which is DBS Bank. And then by the total asset itself, technically they are the ASEAN's biggest bank. And of course, the headquarters is in Singapore, but they also have some subsidiaries in Hong Kong and Taiwan, and have a few operating branches across the globes. So, but regardless of all this information, all these operating branches, the fundamental thing is this is a bank that founded by Singaporean government, and technically can link DBS to the growth of Singapore because it's actually driven a lot by the government itself, right? So what is so interesting about DBS is they have been recognized as the world best bank by different organizations. So if you take a look into the top part, is a recognition coming from Global Finance, and it's their third years of getting it, right? But of course, not only from this organization alone, they're also being recognized by the bankers. Also, another one is coming from Euromoney. So a bank itself can get recognition from multiple organizations, which means they did manage their banking services pretty well and able to outperform if compared with other banks across the world, right? So we won't really go deep into what DBS Bank is all about. Basically, it's all the typical banking services, but today we will tell you what's more than that. So one of the things is, if you see the one that we have shown in here, is technically a platform set up by DBS, UOB, and also OCBC. You can treat it like a payment gateway channels, which allow you to make cashless transaction through some sort of debit cards. So before all these e-wallets appear, Singapore government has been trying very hard to push cashless transaction. And one of the things that are being set up initiated by the three bank is this nets. But of course, currently it might not be that useful anymore because people has moved on to use let's say Google Pay or other e-wallets. But nevertheless, they used to be one of the leading payment type in Singapore back then. Of course, they're not only owning DBS Bank as alone. POSB is another bank that actually owned by them. It's one of their big subsidiaries. Beyond all these services, they also offer wealth management platform, which is branded under this platform called DBS Vehicle Securities, right? So maybe you will think like me is a bit similar to all the bank in Malaysia. You also either offer a wealth management platform or you offer insurance. But what I'm going to tell you here is actually DBS try their best to actually diversify their portfolio. So you can see they not only concentrated in Singapore, they also have a few revenue coming from Hong Kong, Southeast Asia, and also rest of Greater China. And of course, they also have small branch across the globe, and it make up to a very good performance from a year-to-year perspective. And if you talk about the industry concentration, it's quite diversified, covering manufacturing, building and constructions, housing loan, and so on. Right. So this is all the banking services. And then you can see in a deeper look on how it actually perform by different region, and you can see a very good recovery signal if you compare the first half of 2021 against the second half of 2020. The main reason is actually coming from, if you see the roll call allowance for credits and other losses is quite big number, not only in Singapore, you can see it in Hong Kong and so on. But when we step into 2021, the losses is actually reduced significantly. That's why they are able to show a very good net profit if you compare with the second half of 2021. Right. So if you talk about DBS Bank, it's quite hard for them to grow because they already have so many branches across the group, but they have acquired a few strategy to actually keep their portfolio growing. So one of the way to grow inorganically is through acquisition. So you can see they wanted to actually expand their presence or business from India. So they go and actually merge with this Lakshmi's Villas Bank in India. And then through this, they are able to expand their revenue income easily. So this is one of the example. Beside the acquisition, happened in India. They also buy a 13% stake in Shenzhen Rural Commercial Bank as a step to actually go into China markets. So this is a strategic play by doing some of the merger and acquisition to have some inorganic growth. And then other than that, they also put a lot of initiative to grow their so-called new business pillar. So one of it is actually the so-called DBS digital asset ecosystem. They allow the people to use this platform to actually manage their digital assets such as cryptocurrency and so on. And when you think going into cryptocurrency is considered quite creative already, they actually step into another initiative that is actually backed by SGX, which is Bursa equivalents in Malaysia, and also work with Standard Chartered Bank and also Temasek to launch this platform called Climate Impact X. So what is this Climate Impact X? It's basically a platform to allow you to basically trade carbon credits. So while you're thinking now DBS can put their foot into exchange of cryptocurrency, they also allow some of the other people to trade carbon credits, right? And then of course, when we talk about all this, beside these two, they also have their foot step into a creative payment platform backed by blockchain, which they work very closely with JP Morgan and also Temasek. Other than that, they also have another initiative called Evolution X, where they work with Temasek to launch a debt financing platform in Asia. So this is all the different things that actually set up by DBS Bank from a new business perspective. But if you take a deeper look on all their previous initiatives. So this is one of the example. They actually set up this JV in China to actually grow some of the business in there, and it also actually show a quite significant growth ever since they have put their step in it back in 2020. Beside that, they also see a very good growth in number with this platform that is particularly serving the supply chain finance. So, in summary, they are expecting to be able to bring in more revenues from all these new initiatives, and you can see it's actually summarized by these three key pillars: grow through inorganically through acquisition or merger, and then they put in a lot of strategic partnership with different guys to set up new business, and all the things they have set up previously, they are able to see quite a good acceleration. So this pretty much sums up what DBS is all about. They are not just providing traditional banking services; they also try to put their foot in different places. So you are able to see the growth not only from the banking services, but also other places, right? So in short, it looked quite promising from different offer perspective. But when it go into numbers, whether it really reflects this thing accordingly or not, I will pass it to Jopans to actually share some of the performance that happened, especially in this first 2 quarters of 2021, and then you will be able to make a better judgment on this bank.
Yeah, thanks, Chumbing. So I think we will jump straight into DBS financial info. So basically, we will touch on what have happened for the entire year of fiscal 2020, and then for the 2 quarters of 2021, how have they recovered, and from a momentum and perspective point, is that actually a good sign or not, right? So we have talked about banks around the world have shown recovery, and for DBS in terms of the magnitude, how good is it, and are there any weaknesses or are there any strengths that we should actually take note before we make potential investment decision to either buy, hold, or sell regarding to each our risk appetite. But before that, we will actually give a shout out to what we are currently also doing for our premium club members. So we do have a subscription service where you actually get the opportunity to join our premium club, and inside this list of services that we do offer would be number one, a private invitation to our Facebook group where we also will talk about stocks, discuss reading materials on a more daily basis and a more detailed basis also. We will also have a monthly private video share session like what we are doing right now, but into specific topics and companies. And of course, for those who have actually joined us in our Stock Plus 2021, where we pick 10 companies which we are confident and hopeful for their entire 2021 performances, we are also going to repeat that kind of exercise. This time around, it will be one of the component for Kaya Plus Premium Club as well. Of course, there will also be premium articles and premium analysis on companies and also strategies and also mindsets on related to investing. And last but not least, for those who have joined us also in our Dividend Gems investing class, you will also be getting the furnished Dividend Gems report. And last but not least, one important aspect is to actually deep dive into different kinds of themes to actually find the best investment company candidate. Will also be one of the so-called offerings and services we do provide for our Kaya Plus Premium Club members. So here's just a brief example of what you guys will be actually getting. So we will have a private group in Facebook, and then the latest topic that we actually held with our private session would be talking about identifying multi-bagger stocks that can go up to 100%, 200%, 300% and beyond, and how to actually identify them. And of course, we also will do some quarterly reviews on companies that have just released their results, even though companies like C might be still reporting higher and higher losses. We gave our opinions and feedbacks and analysis on why it could be a worthy investment if you put aside the loss and focus on certain metrics and KPIs. And of course, those who have actually joined us in our dividend investing class, you also will get a so-called supplementary kind of report where we run through our hurdle techniques to actually justify whether this company will be a solid and growing dividend paymaster. Right. Of course, on the thematic sharings, we will be touching on e-commerce in the coming sessions. So the ones that we have already finished will be the EV and also semiconductor. So those who are the premium club members, yeah, they can continue to stream and watch it on demand. And of course, if you actually join our premium club right now, you can also stream back what we have shared for EV and semiconductor, and hopefully be in time to actually join us for e-commerce essentials live, right? And of course, I think that's about it. This is just basically a snapshot of what are the companies that we will be covering, from the marketplace, online shops, to the payment companies, and also the logistics and warehouse companies, and last but not least, last mile service delivery companies. So you have a multitude of companies from around the world, in China, US, and also Singapore, and our Malaysia stocks as well. So coming back to the company of the night, which is DBS, of course, you can see that from a total income or total revenue point of view, it has been stable growing, which is quite a good sign. Even though fiscal year 2020, you might argue that it has actually stayed quite flattish. Profit, on the other hand, has actually been decreased. This is quite expected, as we all know that not only DBS banks, but financial institutions and banks around the world have suffered quite a bit from the COVID-19 pandemic, which actually impaired some of the so-called performances of banks for fiscal year 2020. But nevertheless, if you look down deeper into the so-called revenue segment contribution, banks, as we all know, require or rely on some of the so-called lending and borrowing business, and that particular aspect is impacted by interest rates, government policies, and whether the government tends to be on the hawkish side or the dovish side, and that will actually impact the interest rate movement trends. So put that aside, even though it still contributes to around 62%, but relatively, if you look back to our previous banks in Malaysia and compare it side by side, actually DBS Bank is actually on the lower side in terms of relying on the lending and borrowing business, as the Malaysian banks usually show a trend or ratio of around 70+% coming from the lending and borrowing business. So the balance 40% will be coming from net fee and commission income. So this is basically all the miscellaneous and supplementary fees and incomes that the bank charges when they help customers or clients to do certain kinds of tasks, be it on the business side or even from a loan service, new loan application as well. So of course, there's also income coming from the trading incomes, and also contribution coming from the investment securities as well. So that aside, I would say comparatively, this is quite a healthy breakdown, having a huge portion of 40% coming from the non-interest portion, which tends to be not that easily affected by the government or central bank policy on interest rates. Of course, if you look at what has happened or transpired for first half of 2021, actually the first half net profit has actually up by 54% on a year to record. So you can see that one of the key aspects, or I would say catalyst that actually push up the net profit would be the loan growth. Even though loan has actually grown 7%, but the bank also came out and said that in terms of overall net interest income, it is down by 12%, and that is majorly caused by the so-called net interest margin actually coming down, right? Later we talk about more deeper, but on the other hand, even though net interest income, the borrowing business is impacted, you can see that fee income is up by 20%. So these are the so-called income portion that we talked about just now that is not affected by interest rate policy. So that portion is actually helping the bank to grow and achieve a 54% increase or growth compared to what has happened last year as well, right? So of course, on the other good aspects, you can see that non-interest income is marginally down, but the underlying expenses is relatively flat compared to last year. So due to that, collectively, the bank actually reported a 54% growth. Of course, we talk about the net interest income and the margin that has been one of the key factors that have pulled down the net interest income. You can see from the so-called trend right here, comparatively from first half of 2020 to second half of 2020, and also to the latest first half of 2021, net interest margin has been coming down, and you can see that the net interest income has also been coming down as well. But fortunately, the bank has actually tried to play around and try to look around how to actually grow their, or so-called stabilize the net interest income, is by growing the loan growth. So that is where the 7% loan growth comes about. And then of course, you can see that even though net interest margin is expected to flattish and stabilize around 1.5%-ish, but if the bank can actually continue to grow the loan growth, you might actually see some sort of a catalyst or prospect coming in the upcoming quarters and also the second half of 2021. Of course, if you talk about how confident are you in DBS in growing their loan growth, so here is just a historical snapshot for the past 10 years data on how stable DBS have actually managed to grow their loan growth. So even though throughout the past 10 years, there have been multiple events where, markets tend to fluctuate wildly, but from the fundamental point and even deep down into the so-called loan growth historical trend, you can see that DBS is actually quite stable in terms of achieving a stable growth in their loan growth. So if this trend were to continue, even though the net interest margin might continue to come down a bit, but if the loan growth can actually outpace that, you can actually might see some kind of positive results coming from the loan or the net interest income portion in the coming quarters. Of course, we talk about one of the good aspects, which is the loan is actually up by 6% year to date on a broad-based growth. So what we want to actually take a deeper look is that even the loan growth is coming from categories that we would say relatively safe. So consumer loan growth is actually coming from the housing and also the wealth management side. So these are so-called portions or categories that we talked just now that would be relatively safer, since housing is actually something less risky compared to business loans or even giving out capital and borrowings to businesses who are trying to start up after the so-called economic reopening. So in some ways, these are relatively safer loans that the bank has actually chose to focus on to grow. And of course, what we also are quite positive on is that the gross fee income is actually up by 19%. So these are the so-called fees that are related to investment banking, wealth management, loan-related cards, credit cards, debit cards, and also the transactional services that the bank does also offer. So you can see due to all of these non-interest income actually adding up and also growing, and in a so-called, I would say, condition or situation where net interest margin is also badly affected, at least this portion of the non-interest income is coming in to actually help the bank continue growing. And of course, apart from the so-called contribution from so many verticals in terms of the revenue segment, I would say in terms of expenses, is marginally up, and you can actually argue it from another point of view. If you are actually looking to, grow your loan portfolio, there must be some kind of head counts, and also your sales team must also have to actually grow in the expense of hitting a certain growth of percentage in terms of loan growth as well. So I would say it's marginally higher, but hopefully this will translate into a more robust kind of loan growth in the coming quarters. And of course, banks usually tend to be very good dividend paymaster. So of course, to just compare how much cash the DBS Bank has actually put in from the operational side versus the amount of dividends that they are paying out, you can see that they are quite lenient in terms of the dividend payout ratio. So they don't overpay. And if you really look into how DBS manages capital, they are more of a bank that is more willing to grow its so-called businesses rather than channel most of their retained profits into dividend payment. Of course, you can also realize that there is a downtrend in the amount of dividends paid out from 2018 until 2020 is due to the fact that 2018, I think it was one of the milestone where they actually got the world's best bank, and then they actually gave out a special dividend. And of course, what happened in 2020 was due to the so-called uncertainty during the height of the pandemic, MAS actually kept the dividend payouts by banks, so that in terms of the so-called capital structure, the bank is actually more well protected and more defensive when it comes to undergoing the uncertain period that we have actually just passed. So of course, DBS Bank, as of today's price, is not, I would say, not cheap, right? But I think you can actually look at it from another side of it, is that yes, valuation is rich, but this is a bank that is focusing on not just the traditional side of banking, but is also looking to evolve, and also initiatives that might be the future of our so-called traditional financing kind of activities, and also events that I think we have been doing banking for the same pattern or the same approach for the past 50 to 60 years. So they are actually looking into blockchain, cryptocurrency. So that could actually be a winning perspective to it. So maybe I'll pass it to Chun Beng. Do you think it's a special bank compared to the banks that we have touched about, especially the Malaysian banks?
Okay, so I think when we talk about bank, is quite straightforward. A lot of people are looking for dividend income, and they are putting a lot of focus into their past performance. What is their net interest margin? Are they growing their loan profile or whatnot? This is the reason why this whole bank valuation usually is very, very low, because it's super predictable and is following the economic trends, right? So, but when we take a deeper look into DBS Bank, you'll find out it's about a 60-40 kind of thing. 60% come from net interest income, and the rest coming from the other things. So the other things give you a few perspective, meaning if the core banking going to be challenged by the digital banks or other player, in Malaysia it's quite popular with e-wallets and so on. DBS Bank, 40%, they're coming from very, very innovative new businesses. So I think this is the reason why DBS to me is quite interesting. It allows you to actually see some of the growing potential in the futures, rather than just pure banking, and then seems to be a sunset industry where you only can expect dividend income. But of course, we need to look into the numbers from the valuation perspective. So I pass it to Jupan to cover the numbers.
Right. So if you look at DBS Bank, I think as of today or just a few days back, it is currently at its pre-pandemic high, which is around 30 Sing dollars per share. The ratio, PE ratio, you're actually paying it for is around 13 times PE ratio. And of course, the dividend yield is around 2.8% trailing. So I would say not so bad if you compare to the kind of returns that you might be getting for your savings account or your fixed deposits, or even based on the so-called upcoming prospects that DBS is actually working on, not only from an inorganic growth point of view, but also from the new initiatives that I don't think a lot of banks, at least the more traditional ones, are currently focusing at, right? And of course, one of the key reasons that actually made the share price recover so fast is that the MAS, Monetary Authority of Singapore, actually lift up the dividend cap, the so-called protective measures that they actually put in during the height of the pandemic, so that they actually help the banks to conserve capital, do not overpay out the dividends, right? But as the so-called COVID recovery and also the vaccination actually continues to improve, Singapore side actually lift up the dividend cap, and banks are actually going back to paying good dividend payout ratios, and due to that reason, part of it, you can see most of the Singaporean banks have actually recovered, and the share price actually went up quite a bit over the past few months back, right? Of course, the verdict that we have for DBS, I think, is straightforward. This is a bank that, even though started off its business model as a relatively traditional lending and borrowing business, but it is actually looking into a lot of aspects, a lot of initiatives that could potentially become one of the changing landscapes of the future of banking. Valuation is definitely not cheap, but if you are confident on how this bank can continue to reinvent and continue to be a leadership in terms of upcoming new ways of doing banking, definitely this is a bank that can still continue to grow and continue to evolve, even though they are smaller and more highly competitive players out there. So yeah, let us know in the comment section. Do you actually think DBS Bank will continue to grow up to 35 Sing dollars a share, $40 Sing dollars a share, or you are more confident in its competitor like UOB or even OCBC Bank? Both, I think all banks have their pros and cons, but in terms of how DBS is reinventing the banking system, it's actually worth a deeper look. So I think that's about it from our side. Of course, do let us know if you have any other companies in mind that you want us to do a similar sharing and also similar analysis in our upcoming Not So Late Night show. If you also like our video, do share it to your friends and families. Give us a like and subscribe to our channel so that it can actually help us to create similar kinds of videos to not only share to you, but also to other friends and families who are into investing. So we'll see you in the next episode of our Not So Late Night show next week. Take care. Bye-bye.